HPCL missed its estimates for Q2 on back of lower sales volumes, lower refining margins and inventory gains. Bloomberg Quint's Bhanvi Arora caught up with Mukesh Surana, Chairman and Managing Director of the company, and began by asking him the impact of falling crude oil prices for the company. Let's hear him out.
So the crude prices are slightly moving up and down of late. But if it is below 65, which we expect it to remain in the range of 57 to 65, and the cracks for gasoline and diesel in the range of 11 to 12, then I think on an average basis we should be able to post a GRM around 6.
What are your marketing margins for petrol and diesel, and do you intend to keep the same marketing margins or will you be taking a cut?
No, we don't decide to cut or not to cut as such. So time to time we take a decision on to ensuring the commercial health of the companies, the options which we have got in terms of refinery profitability, in terms of marketing profitability, in terms of inventory gains, etc. And at the same time ensuring that the consumers are also not much inconvenienced. So those decisions are taken time to time. But the prices are built up from the international prices.
And how do you see the movement in crude oil prices?
So crude oil prices have changed between 60 to 65 in last few days. It shown sudden upward movement because of some of the geopolitical tensions in some part of the world. In Saudi Arabia, in terms of Iraq, then the financial concerns in Venezuela, then the tension between America and Korea, plus some of the concerns where the inflationary pressures will be there in US. So that has taken the prices of crude upward because the rig counts in US also came down a little bit. But I still think that the long-term structural signs are not there still. That are more the momentous type of reactions to some of the actions which are happening or not happening. There is a meeting of OPEC in November end which will take a decision whether the cut should be continued beyond March 2018. That may also give certain directions. But the OPEC cuts had soaked up some of the inventories, not completely. And as soon as the crude price start going higher, the rigs again start coming into operation, and the US production starts. So there's a bit of a seesaw between the two. We still assume that it should be hovering between 58 to 65 also. If it crosses conclusively beyond 65, then we need to see.
So what is the kind of petrol and diesel volume growth that you're expecting for H2 FY18?
So right now in the first quarter, if we see, first half year if we see, the diesel growth had been in the range of 3.4%, 3.8% or so. And we expect a similar range between around 4 to 4.5% for diesel, and 8% about for MS.
Could you give us an update on the Barmer refinery? How when is it going to be completed, and who all have shown interest?
No, right now Barmer refinery is being set up by us and Government of Rajasthan, and we are targeting it for completion by 2022. We already have received the environment clearance for the project. We have got a site land lease also signed. Government approval is received. We have started work on the project. So now the boundary wall, etc. is being made. We are in the process of selecting the licensors. Other construction work for non-plant building.